Here we go. This is my price target for Intel. This is based on 3 different valuation methodologies. The first, we have a discounted cash flow. The second, we have a price to sales valuation. And the third, we have an EV to EBITDA valuation. So what is my target price for Intel? Keep watching, find out. Thanks everyone so much for watching. I do want to remind you, I'm not a financial advisor. This is not financial advice. This is just my opinion. And let's face it, I am not right 100% of the time. So please do your own due diligence. What's up everyone? My name's Robbie. This is Robbie and Manila. And today we're doing a stock analysis of Intel. All right, we got a jam-packed episode. So we have the different valuation methodologies that I talked to you about before. We're going to figure out a target price based on those. We're also going through my Cat 5 score, which is a score that I created based on some things that I like to see in stocks. And also we're going to do some technical analysis. Now don't forget, leave a little comment below. Let me know what you think about Intel stock. If you have any other recommendations of stocks to do, feel free to leave them below. And also hit the like button, subscribe. And by the way, some affiliate links below in the description if you want to support my channel. Please take a look at those. Let's start with dividends. So Intel does pay a dividend, a decent dividend actually. 8 years is the increased track record of the dividend of Intel. So it's been increasing its dividend 8 years. The dividend yield for this is 3.07%, a nice healthy dividend for this company. The dividend growth has been about 5.4% over 3 years. The free cash flow payout ratio, so I do here as I say, how much free cash flow does this company make per share? What are the dividends that it pays per share? And what's the ratio there? And it's 58.47%. So that's okay. But then there's another thing that I like to look at, which is I add shares outstanding to see what that looks like, because a company can only buy so many shares. I should have said shares outstanding, share buybacks. So a company can only spend so much money to buy shares and also pay a dividend, right? So if it gets too high, if those two things get too high, eventually one of them is going to probably stop, right? So it's at 83.49% for dividends and share buybacks. For me, that's too high, and I think that the buybacks are probably going to suffer at some point for that, possibly. See what happens, but I'm going to actually take that into consideration in the valuation. Okay, moving on. What is the price target for Intel based on a price to sales valuation? So I have this at $64 per share. Today, if you had purchased that and it grew to this much in the end of the year, for example, by 2022, 34.57% is that growth. Now, let's say you bought it and held it till 2026. My price target is $86. That is 12.20%. That crosses off, that equals what I like to see in a stock to buy. So let's briefly and quickly go through how I got these numbers. So first off, shares outstanding I have decreasing at 3%. Now, remember I said I think they're paying off too many, they're doing too much spending, right? Shares outstanding plus dividends. So the median's about negative 3.4% and the average is about negative 3.38%. So I shaved off, maybe 50, 40 basis points here. So I think they're going to be buying back shares at 3% over the next 6 years. So that's step one. Step one is to find shares outstanding. Let's move on to step two. So step two is the growth forecast for the company. And so we have a median growth rate going back for revenue or sales, 4.09 and an average 3.88. So I use 2% to start. Now, I want to kind of justify what's going on here. So they're putting a lot of money into new facilities and they're spending a lot in CapEx, and essentially they're going to be able to likely, I think, grow their revenues because they're going to have a lot more efficiency and ability to basically create more using the new facilities that they're building. So I think that sales will increase, and so I have sales increasing. I have it increasing a bit, 2%, 2.5%, 3.555. Now, the median sales growth recently over the past 9 years, 4.09%. But if we look back 3 years, growth has been 3.71, 1 year, 1.49. So more recently growth is slowed a bit. So that's why I'm using 2 and then going up from there. So that's what I'm doing. That's what I am going to project here. Next is step 3. So here we have to find a sales multiple. So what I used here was, well, first off, we have the median is 3.11. These are the sales multiples at the end of the years. So 3.11 and 2.53 is the current, and then average is 3.15. So these two are very close, and it's under what it's been in the past. So I went with the median / kind of average here with a 3.15 price to sales multiple. So what this looks like is currently $64 per share is the price target. That's a 34.57% rate of return if it hit that by the end of the year. Now, if I held on to this and grew this thing over 6 years until 2026, not 6 years, $84.55 is the target price. 12%, around 12% is the growth rate on that. If you don't like the numbers I used here, the multiples I used, these are different multiples here. 2.67, this is 3.5, this is 4.5. Pick your flavor of whatever you want on this one. So if you don't like what I used, take a look at those. Maybe you like those more. So for EV to EBITDA, what I have is a $54 price target for 2022. That's a 13.67% rate of return, and then growing that to 2026 would be $73, and this is actually a little less. This is 8.89%, a little lower than what I would like to see in that time period. Let's go through some of the numbers here. So shares outstanding, number 1, what do we do? So I have the same shares outstanding declining 3% each year. So next up is step 2, we have EBITDA forecast. So I have here the different EBITDA growth numbers over the past few different years, periods. The median of these is 3.23, average 2.17. I went with a 3, so kind of like splitting them a bit in the middle here, and then I have it increasing, like I said before, due to an increase in production and their ability to sell more products and basically generate more revenue and EBITDA. So I think that's going to increase over time. So I have it growing at 3%, 3%, then 4, then 5, then 6. So I do have it growing quite a bit by 2026. Let's take a look at the step 3, which is the EV to EBITDA multiple. So I have historic multiples here. So end of the year multiples. So the average of these is 6.9. Median's about 6.9 also. So that's good. They're very close. Now the EV to EBITDA multiples for this industry don't tend to be very high. So I'm actually going to be more conservative on this one. So I'm going to go, instead of 6.9, I'm going with a 6.5, just a little bit under what the average and the median are. The 2022 was 6.43, so it's not too far off. So this is a $54.06 price target, 13.67% return. If this were to occur, growing up until $72.81, but that would be 8% essentially, almost 9% growth. So a little under what I would like to see. Probably, if I'm being honest, I would like to see 12% minimum usually for something I'm investing in. And okay, so next we're going to go through my Cat 5 score, and after that, we're going to go through a discounted cash flow. Okay, so if you're new here, for my Cat 5 score, what I do is I go through some different factors that I think are important. There's 5 categories, that's why it's called the Cat 5 score. First off, we have the pure valuation score. It got a 100%. Pure profitability score, it got a 100%. These are very good scores. The pure growth score, it got a 47%. And liquidity, it got 100%. And Rolex score is 70%. Let's just go briefly over some of the numbers here. So what I would point out here is, valuation-wise, this company is looking very good. Profitability-wise, this company is looking very good. The growth score, not as great, so a bit low on that one. Like I said, I think the growth, maybe next couple of years, 3 years, might not be as great, but starting to grow a little more after that. And then liquidity score is good. Rolex score is decent. Now this is how I get to these scores. You can always pause this and take a look at all the numbers, but the deal is I use a decile type system. And now you might not know what that is, so what essentially I'm doing is I'm taking all of the different, for example, PE ratios here of the entire industry that this company operates in. So to visually see this, there's 49 different companies in this industry that I used. I took the PEs of all of those different companies, the 49 companies, I ranked them, and the top, let's say the 10 lowest PEs, which low means it's cheaper, right? So a lower PE is going to be in the first decile. The higher PEs, the highest PEs out of all these is going to be in the 10th decile. And so that's what I did. So I basically just ranked these in deciles. These are all the different deciles. The PE ratio of this company is 9.79, is in the first decile. So I really do this because I don't think there's one PE ratio that a company should just be under. I like to compare it to its peers. So here are all the different points. So it got a score of a 5, which is the best you can get. So these are the scores here. A 5 if you're in decile 1 to 4, a 2 if you're in decile 5 to 7, a 0 if you're more than decile 8 or more. So it got 5, the highest score for PE ratio, highest score for forward PE, highest score for price to sales, highest score for price to free cash flow. Moving down, gross margin, highest score you can get, net margin, highest score you can get, revenue, almost the highest score you can get, a 2, so it's in the middle there. It's the 6th decile for revenue growth, but then earnings per share growth actually is very good, 18.10% in the 4th decile, so that gets the highest of the scores. A 0 for free cash flow, because the free cash flow is not, this one I actually like to just see above 10%, and it's not there. Then for liquidity, we have a full score here. It's a 5, so I like to see this. I like to see the debt to equity ratio essentially less than 2, so it's totally good. 0.38 is the industry average, 0.40, so it's the industry average, so definitely good. F score here is a 6. If you don't know about F score, take a look at my video on that. But I like to be a 7, 8, or 9 for the F score. A 6 is okay, so it's not too bad. So it got half a score, a 2. And shares outstanding, likely it's going to be good if it's decreasing. You don't want them diluting you too much, of course. So this is a good sign, so it's a 5 here. So what's the total Cat 5 score? I like to see a 70 or above. And this company has a 49 out of a possible 60. It gets a 82% Cat 5 score. One of the higher Cat 5 scores that I've done recently on this channel. Okay, so moving on to the discounted cash flow. This one has some important things to talk about. So first off, if you take a look at free cash flow over the past 10 years, it's been 8.50%, 5 years 7.3%, but negative over the past 1 year. So I do want to show you what I have here, which is a calculation spreadsheet that takes a lot of different time periods and kind of brings in a median of all the different growth rates. So what I do here is I say, okay, what's the growth rate? What's the average growth rate? Or what is the growth rate between 2015 and 2019? 12.22%. Between 2016 and 2020, 2.48%. So we have all these different years to see all the different types of growth rates, right? So some of these are 4-year periods, some are 3-year periods. So I want to just see what's a normal growth rate for this company by looking at a bunch of different growth rates, different years and things like that. What this ends up averaging is a 12.22% median growth rate, or an average of 15%. So this is much higher than what you're seeing over here, which is an 8.5% growth rate over 10 years. So what I think is a more appropriate growth rate is probably going to be 12-ish, but I'm going to go lower because, like I said, I think there might be a little bit less growth in the near term. So what I did was, instead of going with a 12.5, I went with an 11.5. I shaved a percentage point off. Over 10 years, I got a $49.97 target price for this company using this model. Okay, so here we go. This is my target price for Intel. So we do the discounted cash flow. So we weight these different valuation methodologies. So 33% of the weighting will be my $50 price target for through a DCF. Next would be the price to sales valuation, another 33% of weighting. $64 is what I got for the price target here. EBITDA, another 33%. This was $54 for this one, and it equals a $56 target price for this company right now. This is an upside potential of 17.3%. So in my opinion, for me, I like this. I would be happy buying it. All right, on to some technical analysis. So this is Intel's chart going back until around, let's say July, let's say summertime of 2018. This thing looks very different than a lot of stocks you might have seen recently, which really, went up a bit. Huge decline during the 2020 pandemic area, which is this one right here. Bouncing right back up, but then falling back down. A lot of these companies didn't have this drastic decline back. look at these giant gaps. I mean, this thing's all over the place. It's kind of a crazy chart. So we have the 200-day moving average trading above the 50-day moving average. So 50 days actually right around the stock price, possible resistance there. Let me throw some drawings on here so you can see what I'm doing. Actually, let's zoom out for a second here to see the uptrend channel that it's in. So here's an uptrend channel. It has been in this thing since 2018 January time period. So quite a lot of hits on this. Let's say 1, 2, 3, 4, 5, 6, 7. So this thing is definitely a strong trend line. So we're zooming in here. We see it's currently inside of a shorter term downtrend channel, and it did bounce off of the bottom of the trend line. So okay, this is interesting. So this thing is definitely potentially holding, I would say. You know, it's this price action right now is on the way down towards this trend line. So we're going to see what happens on this one. But this is in the shorter term here, let's just say, just zoom in a little closer here. This is this is a pennant formation. Not 100% on this one, but no, let's say if it's a pennant, then this thing could go up to this area. You take the flagpole there and you project it up, so let's say 54. That would break it out of this downtrend channel. It could be interesting if that happened, but I'm not sure that's going to happen. But what I do think is I would watch this little support area. If it breaks down through that, yikes, that could be a bad thing. So I'm probably would expect, considering what's gone on historically the past few years, it would definitely bounce off of this if it does get down here. Now, RSI is definitely declining here, but it's now kind of sitting in the middle. But as you can see, RSI has definitely been able to get down here, so it wouldn't be weird if it got down to the 20s, 2035 area. And then if you take a look at MACD, the oscillators are starting to grow. The signal line is above the MACD line, so that's also bearish, meaning that this thing could still continue down further. I would expect it probably, looking at all these things, to go down here to test this uptrend channel, sorry. And of course, you have this little resistance in the moving averages kind of working against it. So if I'm just buying Intel because I like the stock price right now, I think it's undervalued, like you saw my price target, then if I'm dollar cost averaging, I'm buying the stock right now for sure. It's totally fine, $46, it's got upside. If I'm waiting for an entry, I'm waiting to see if this kind of gets closer to this uptrend channel, and if it does, the uptrend line, if it breaks through that, then I'm wary and watching what might happen from there, and I wouldn't buy yet. If it bounced, I would buy on the bounce for sure. So anyway, that's all I have for the video. Thanks so much for watching. Hit the like button, subscribe if you want to see future content like this. Let me know if you have stocks you want me to go over in the future. Leave a comment below, and have another video coming up on the end screen right now.